Hi, and thanks for joining us on this webinar. My name is Claire Morrison, and I'm the Accounts and Annual Returns Manager at OSCR. I've been with OSCR for 13 years, and so I've got quite a lot of experience in the area of charity accounting. I'm joined today by my colleague Alison Adams, the Accounts and Annual Returns Officer at OSCR. Alison has been with OSCR for around 4 years now and is responsible for reviewing many of the sets of accounts which are submitted to OSCR. So today we're going to talk to you about your annual submission to OSCR and how you can ensure that you get that right. So we're going to cover 5 key areas. Firstly, a brief outline of what charities are required to submit to OSCR each year. Then we'll explain what's required in terms of the annual return, the type of questions you might be asked, and the information you will need to provide. Alison will then cover the requirements for a set of receipts and payments accounts and how to ensure that this is correct for filing. I'll talk a little bit about the future publication of accounts and key areas to consider in relation to this. And then we'll finish with an explanation of the work that Alison and I do in terms of monitoring the account submissions. So what do you need to submit to OSCR? Every year, you're required to complete the OSCR online annual return, which asks some questions about the charity. With the annual return, the charity must upload a set of their annual accounts for the year, and this will include the trustee's annual report, financial information, and the external scrutiny report. The annual accounts must be filed with us within 9 months of the financial year end, so it's really important that you start to consider this as early as possible after the year end to allow for everything to be organised and completed in time. The OSCR online annual return is accessed through the OSCR website. There can be up to 3 users registered for OSCR Online for each charity, and a user can be a user of more than one charity. Each user will log in with an email and password and can then access the charity to which they are connected. The return will be ready to complete immediately after the charity's year end, but you should wait until the annual accounts have been finalised before starting to complete your annual return, as some of the questions relate to the financial information which is contained within the accounts. There are 3 sections of questions on the annual return. Section A asks some initial questions about the charity. These questions include asking about the number of charity trustees, employees, and volunteers at the end of the financial year. Section A also asks about the charity's banking arrangements. Section B asks some information about the finances of the charity. It asks about the income and expenditure of the charity and the type of accounts which the charity has prepared. There will be some follow-up questions about the assets of the charity, and these will differ depending on the type of accounts which have been prepared. Section C asks about what the charity does and how the charity is run. It asks questions about any changes to the governing document and when the governing document was last reviewed. It then asks some questions about the trustees, including whether the charity is operating with the minimum number of trustees and whether there are appropriate induction procedures, and also some questions about trustee remuneration. If a charity operates overseas, then they will also be asked some additional questions about this. The annual return should be straightforward to complete for someone who has a good knowledge of the charity. Sometimes charity trustees ask their accountant or advisors to complete the annual return, and this is fine, but they may need to work together just to ensure that the accountant has a good understanding of the governance. There will be pop-up messages during the completion of the annual return to help you get it right, and there's also guidance which can be accessed by clicking on the icons beside the questions. It's really important to make sure that you check all your login details are working correctly well in advance of the submission deadline. This will allow sufficient time to ensure that you can log in correctly and get in touch with us if there are any issues. Just a reminder that we will be closing for Christmas. We close on Christmas Eve and don't reopen until the 3rd of January. So if you do have a December submission, it's really important that you check you can log on before this and make sure that you can submit on time. So what are the legislative requirements for charity accounts? There are 3 main pieces of legislation that relate to charity accounting in Scotland. The Charity and Trustee Investment Scotland Act 2005 is the main piece of legislation for charities in Scotland. In terms of accounts, it sets out requirements for charities to keep proper accounting records, prepare a statement of accounts annually, which must be examined or audited, and submit these to OSCR. This Act also includes the requirement to complete and submit the annual return to us each year. The Charities Accounts Scotland Regulations 2006 is the legislation which sets out the detail of the accounts. So this sets out the income thresholds for different types of accounts that can be prepared, whether accounts can be independently examined or audited, and what style of accounts and notes need to be included. The Statement of Recommended Practice, or the Charities SORP, is a specific piece of legislation which is required for charities who are preparing fully accrued accounts. There are two types of accounts which can be prepared by charities in Scotland. There are receipts and payments accounts, which are a very simple form of accounting. These are prepared on a cash basis, reflecting the cash transactions in and out of the charity for the year. They can be used by charities with an income of under $250,000, unless the charity is a company, in which case it must prepare fully accrued accounts. Fully accrued accounts are a more complex form of accounting, which account for timing differences and include adjustments for amounts due to be paid and received by the charity. For the purpose of today's webinar, we are going to concentrate on the preparation of receipts and payments accounts, as most smaller charities are eligible to prepare these. As well as the accounting regulations, it's important that you also consider what your charity's own governing document says in terms of your accounts. Your governing document sets out the rules which your charity must follow, and if there are requirements in this which exceed the requirements set out in the legislation, then the governing document must be followed regardless of the income level or legal form of the charity. Governing documents may have specific financial year-end dates included, and this means that the charity must use this date to prepare their financial accounts. Sometimes a governing document will require the preparation of fully accrued accounts, and where otherwise receipts and payments accounts could be prepared. Older governing documents sometimes refer to a balance sheet, income and expenditure, or profit and loss account, and these terms mean that fully accrued accounts are required. Many older governing documents will also refer to charities' accounts being audited or auditors being appointed. Where these terms are used, the charity must have a full statutory audit, even where otherwise an independent examination would be permitted in terms of the legislation. It's really important for charities and trustees to understand that they are familiar with the terms of their governing document. They need to understand the impact of what their governing document says and the requirements that are set out within it. If the government is out of date, and it means that the charity needs to have a higher level of scrutiny or a higher level of accounts prepared, then the trustees might want to consider changing their governing document. Most governing documents set out a process by which it can be changed, and in following this process, they can make the changes necessary. This will then allow the governing document to meet the requirements which are more suitable to that charity. Ideally, there should be some flexibility in the governing document to allow the trustees a choice in what is prepared. So it should refer to being able to prepare accounts in accordance with the legislation, but also maybe having a choice to be audited or to prepare a higher level of accounts if this is what the trustees choose to do. The type of change to the governing document can usually be made without our consent, but you must notify us of any changes made to the governing document and provide us with an updated copy of the Constitution. I'm now going to pass you to Alison, who will talk through the specific requirements for receipts and payments accounts.
Thank you. So as Claire previously said, receipts and payments accounts can be prepared by all non-company charities whose gross annual income is less than $250,000 and where there is no requirement within the charity's governing document or by funders or by the charity trustees to prepare fully accrued accounts. Receipts and payments accounts are intended to be a simpler form of accounts for smaller charities. The accounts include the money received and the money spent through the charity's bank and cash accounts in the financial year. Although these are a simpler form of accounts, they must still give sufficient detail to enable a reader to gain an appreciation of the transactions of the charity. The receipts and payments accounts will include a trustee's annual report, which provides the narrative information about the charity, a statement of receipts and payments, which provides an analysis of the monies received and the monies paid out by the charity, a a statement of balances, which shows the financial position of the charity at the end of the year, notes to the accounts, which expand on or explain the information contained in the statement of receipts and payments and in the statement of balances, and finally, an external scrutiny report. In receipts and payments accounts, the statement of balances and the trustee's annual report must be signed by one of the charity trustees on behalf of all the charity trustees and specify the date on which they were approved. We will now go on to look at each of these elements in a little bit more detail. So why is the trustee's annual report important? Firstly, it is a legal requirement and charity trustees must ensure that they include a trustee's annual report with their accounts to meet their duties in accordance with the 2005 Act. But as well as being a duty, it is also an opportunity for the charity trustees to tell the story of the charity, to allow readers of the accounts to understand what the charity was set up to do, what activities it undertakes, and what difference the charity has made. The trustee's annual report is also an opportunity for the charity to put some context around the figures in the accounts, enabling readers to understand how the numerical information relates to the organisational structure and the activities of the charity. Explaining to supporters, beneficiaries and the wider public what a charity does and how it is making a difference helps to build strong relationships with stakeholders. By providing a comprehensive trustees' annual report, trustees can provide the assurance that is needed to those using the accounts. The charity trustees are ultimately responsible for preparing the trustees' annual report. They are the people who are in management and control of the charity and who are best placed to understand the achievements and activities of the charity over the year. Charity trustees may get assistance from charity staff or from professional advisors in drafting the report. However, they are the ones who approve the final report and who have the ultimate responsibility for its content. The 2006 regulations set out specific requirements for the content of a trustee's annual report. The report should contain details of trustees who served in the year. This includes trustees serving at the date the annual report is approved, and also anyone who has been a charity trustee during the financial year covered by the accounts. The report should contain details of how the charity is constituted. For example, is it a SCIO, a trust, or an unincorporated association, and include the organisational structure and details of any relationships to any other bodies, such as an affiliation with an umbrella group. The report should contain details about the purposes of the charity, as set out in its governing document, and there should be a summary of the main activities and achievements of the charity in the financial year. The report should include a description of how charity trustees are recruited and appointed, and it should include information about the level of reserves held by the charity and why they are held. If the charity has incurred a deficit in the financial year, there should be an explanation of how the deficit came about and what measures are being taken, if any, to rectify it. The report should also contain information about any donated facilities and services that the charity received during the financial year. Many charities benefit from services or facilities which are donated to them. These will not appear in receipts and payments accounts, but information about the value of these donated services or facilities will allow readers to understand the value that has been contributed to the charity. The Statement of Receipts and Payments provides an analysis of the incoming and outgoing cash and bank transactions for the year and the resulting surplus or deficit. The statement must only include items which are through the bank and cash accounts. In receipts and payments accounts, no adjustments are made for the timing of the receipts or the payments to bring them into line with the activities to which they relate. So to give an example of this, if a charity pays its rent in advance, just before the end of the financial year, the payment will be recorded in the accounts of the year it was actually paid, rather than in the accounts of the year to which the payment relates. The purchase or sale of assets for cash will be included in the receipts and payments accounts as a payment or a receipt in the reporting period. Assets owned by the charity should then be shown separately on the statement of balances for information. The different types of funds held by a charity must be shown separately. The statement must distinguish between unrestricted and restricted funds, as well as any endowment funds. This is usually achieved by giving each fund a separate column in the accounts. Where a charity has more than one fund in any of these categories, it should present the total funds held in each. The notes to the accounts must then explain in sufficient detail the content of the unrestricted, restricted, and endowment funds. To allow comparisons to be made, all figures in the accounts must include the corresponding amount for the previous financial year. As well as a statement of receipts and payments, the accounts must contain a statement of balances. The statement of balances should include a reconciliation of cash and bank balances, showing the opening bank and cash position, the surplus or deficit for the year, and the closing bank and cash position. It is important that the surplus or deficit on the statement of balances is the same as that shown on the statement of receipts and payments, otherwise the accounts will not balance. The statement of balances should also include a note of any other assets held by the charity, such as property or investments, either at their current value if available or at cost. There should also be an estimate of any amounts due by the charity at the end of the year. This additional financial information will help users of the accounts to understand the financial position of the charity. This gives the receipts and payments accounts some additional context, as it provides more information about the charity other than just the bank and cash position. As with the statement of receipts and payments, the statement of balances must also distinguish between restricted, unrestricted, and endowment funds held by the charity. Comparative year information is also required on the statement of balances. This provides a check that the closing bank and cash balance from the previous year has been carried forward correctly to the current financial year, and it will help to identify any errors in the accounts. The notes to the accounts are an important part of the accounts. They expand on or explain the information contained in the statements of receipts and payments and balances. The notes to the accounts must contain certain information. There must be information about the amount of remuneration paid to a charity trustee or person connected to a charity trustee. Any remuneration paid must be in accordance with the 2005 Act, and the note must specify the authority under which the remuneration was paid. It is important to note here that if no remuneration was paid to a charity trustee or anyone connected to a charity trustee, then this must be stated in the accounts. The notes should also include the total amount of expenses, if any, paid to charity trustees, and the number of charity trustees receiving expenses. Again, if no expenses were paid to charity trustees, then this must be stated. The notes must include details about the nature and the purpose of the different funds held by the charity and any restrictions on their use. The notes should detail the number and amount of any grants paid out by the charity, the type of activity or project supported by those grants, and whether they were paid out to an individual or to an organisation. There should be a note about the nature of any transactions between the charity and any charity trustee or connected person. For example, a charity trustee purchasing an asset from the charity, or a charity paying a firm for services such as professional advice, where a charity trustee has a substantial interest in the firm. The related parties note must include information about the nature of the relationship, the nature and amount of the transaction, and any outstanding balances at the financial year end. The notes should also include any further information required to reasonably assist the reader to understand the accounts. All charities must have their accounts externally scrutinised each year. The aim of external scrutiny is to give a degree of confidence in the words and figures presented in the accounts and to confirm that they have been prepared in accordance with the regulations. Someone who is independent of the charity must review the accounts and produce a report which confirms that they have examined the accounts in accordance with the relevant legislation. There are two recognised forms of external scrutiny: independent examination and audit. Independent examination is a form of external scrutiny of accounts that has been specifically designed for smaller charities. In recognition of the size of charities to which it applies, it is a less onerous form of external scrutiny than an audit. The independent examination of receipts and payments accounts must be carried out by someone independent of the management and administration of the charity, and who the trustees believe has the required skills and experience to carry out a competent examination of the accounts. Where receipts and payments accounts are prepared, this does not necessarily have to be a qualified accountant. In deciding who might have the required skills, charity trustees should take into consideration the degree of complexity of the charity's accounts. The more complex the accounts, the more experience the independent examiner will require. An independent examiner should review the accounting records kept by the charity and compare them with the accounts that have been prepared from those records. Although an independent examination is not as rigorous a check as an audit, we would still expect the examiner to verify that the figures in the accounts are correct. Following their review, the examiner should prepare a report which provides the information required by the 2006 regulations and provides an assurance as to whether or not anything has been found that needs to be brought to the attention of readers of the accounts. The independent examiner's report must be submitted along with the accounts. If you require some help to get your receipts and payments accounts right, there are various resources that are available to you. OSCR has produced a receipts and payments accounts workpack on the website, which includes guidance and templates that can be used in the preparation of receipts and payments accounts. So if trustees don't want to design their own annual accounts, they can enter the relevant details and amounts from their accounting records directly onto the forms from the workpack. Or if they do want to produce their own form of receipts and payments accounts, the forms can be used as a checklist. The charity accounting section on the OSCR website has information and guidance on how to prepare charity accounts and make sure that they are properly scrutinised. Further information and guidance for charities is also available from the Scottish Council for Voluntary Organisations, SCVO, which is the membership organisation for Scotland's charities, voluntary organisations and social enterprises. Help is also available from third sector interfaces. These are local organisations that offer support to voluntary organisations, with one in each local authority area across Scotland. If your charity is part of an umbrella organisation, such as Early Years Scotland or Girl Guiding Scotland, for example, they may be able to give you support. And your independent examiner should also be able to give you some support to help get your accounts right and advise if the content is compliant with the legal requirements. I'll now pass back to Claire.
Thanks, Alison. So, moving on to publication of accounts. OSCR currently publishes the accounts for all charities with an income of £25,000 or more and all Scottish Charitable Incorporated Organisations, or SCIOs. At the moment, OSCR redacts all personal information from the accounts prior to publication. And when redacting, we'll also do a quick check of the accounts and ensure that if there's any additional items attached, such as bank statements, these are removed prior to publication. In 2023, there was a change in charity law with some new measures introduced. And one of these changes is that we will display annual reports and accounts for all Scottish charities on the register from the end of 2025. And over time, we will display the latest 5 years of accounts. When doing so, OSCR will no longer redact any of the information in the accounts prior to publication. As such, it's really important that you exercise caution regarding the inclusion of personal information and photographs within the accounts moving forward. Some personal information must be included, so the legislation requires the names of charity trustees, the names of the independent examiner, and names of related parties in accordance with the related party notes. But there is quite often personal information that we see included that you might want to consider moving forward if you still want to include. Some accounts include photos of beneficiaries in the trustees' annual reports, and you should consider whether this is appropriate. Photographs should only be included if written permission has been obtained, and this is particularly important if there's photos of children or vulnerable adults. You should also ensure that you refer to your own safeguarding policy in relation to this, because there might be something in that about what you can publish. You should also consider other areas of the accounts where names may be included. Where grants are provided to individuals, we do see some charities who name the individuals in receipt of the grants. This is not required under the legislation. The legislation only requires to note that the grant has been provided to an individual. So if you do want to include the names, you should really ensure that you have the consent of the individual in relation to this. You might also want to consider the impact on the individual. So if the grant is in relation to hardship, for example, having this in the public domain might be quite harmful to that individual. Beneficiary stories can be really useful in telling the story of the charity and add context to a trustee's annual report. And we encourage charities to include beneficiary stories. But it is important to again consider whether you want to include the personal information. Beneficiary stories might be better to be anonymised, and then you wouldn't be sharing personal data. Overall, charities should ensure that they adhere to data protection regulations, such as the General Data Protection Regulation, to protect the privacy of individuals and avoid any potential issues. By following these guidelines, you can help safeguard the privacy of individuals and maintain the integrity and confidentiality of the information included within the report. Another note of caution is to be really careful about what you upload. Make sure you do only upload the accounts and nothing else. At the moment, we quite often receive copies of bank statements or invoices along with the accounts. We don't need these, and if they are uploaded in the future when we publish, then unfortunately they will show on our register. So please review your uploads carefully before completing the return. And then finally, just a brief summary of what will happen after we receive your annual return. Much of the annual return process is automated, and all charities receive an email after submitting their annual return accounts. Depending on how you've answered the questions, you might receive a guidance email with some helpful guidance about the governance of the charity. You should ensure that any guidance received is shared with the trustees and that improvements are made. If no guidance is received, then you'll receive an email which thanks you for your submission. We don't review all the accounts and returns which are submitted to us, but we do look at a proportion of them. So we review a sample of charities submitting to us for the first time, and this is to help charities get it right initially and get the support in the process when they need it. We also review random samples of accounts to ensure that we are capturing a representative sample of our register. Sometimes we'll carry out reviews based on a type of charity or a risk criteria which we've identified. We may look at charities who have answered questions in a particular way, for example. And internally, we may flag a set of accounts for review, and this might be because we've noted an error on a set of accounts, or we may have an open inquiry into a charity and want to look at the accounts a bit more closely when they're submitted. When we review a set of accounts, we may contact the charity to ask some follow-up questions and get some information from them, or we may simply contact them to provide some guidance for future submissions.